Ladies and gentlemen, welcome. This is Ask the Experts here on Talk Radio 1190, where we interview local prominent professionals here in the Dallas-Fort Worth Metroplex on what? Well, their area of expertise, of course. I'm the host of the show, Matt Cather, and joining me on today's show, it's great to have him back. Always a pleasure to talk to him. It's Josh Stripmatter of Stripmatter Wealth Management Group. Josh is a founder and president of Stripmatter Wealth Management Group, a registered investment advisor located in downtown Fort Worth, Texas. Josh is a certified financial planner and fiduciary that's been practicing since 2003 here in the DFW. His firm specializes in retirement planning, estate planning, and investment management, and all information discussed in today's program is meant to be educational only, and for more information, including key disclosures, please visit their website at stripmatterwealth.com. Let me spell that out for you, folks. It's STRITTMATTER wealth.com. Josh, good morning. How are you doing today, sir?
Matt, I'm doing great. How are you doing?
I'm doing awesome. I tell you what, man, I'm really excited to get into the show today. As always, a ton of information to get to. But before we get to things, I know that you love to educate and you're always teaching classes and writing articles. So why don't you tell our listeners what you have for them today, Josh?
You bet, man. I'm always excited to talk about what we do from an education standpoint. And as you know, we've been teaching classes at several colleges in the area for over a decade now. So if you're interested in learning more about retirement planning, estate planning, investing, just different topics that we teach, just go to our website to sign up. Also, we've got a great report that we've published called the Top 10 Retirement Mistakes to Avoid This Year. That's just a great resource for people who are looking to retire in the next couple of years and looking for some things that they should be thinking about, and then also things they should be avoiding. And you can tell them how to get that.
Yeah, absolutely, Josh. And for folks out there, all you need to do today to get this resource is go to stripmatterwealth.com. Stripmatterwealth.com. You click on resources and free report. You can also email them at info@stripmatterwealth.com. That's info@stripmatterwealth.com. Simply give them a call, 817-210-3444. That's 817-210-3444. They love to hear from you over there. And don't worry, to all my texters out there, we got you covered. You can just text 1190 a.m. to phone number 44222. Just text 1190 a.m. to phone number 44222. All right, Josh, I know this week you've geared your show around a theme. Why don't you tell our listeners more about the theme for this week?
Matt, this week's theme is life insurance. So these are some great questions that we received around life insurance.
All right, fantastic. Well, life insurance is the topic of conversation today. Josh, let's not waste any time. Let's jump right into our first question. It's coming out of Bedford from Otis. Otis asks, well, what are the main types of life insurance, Josh?
Sure, Otis. So you basically have two main types of life insurance. You have what's called permanent life insurance and term life insurance. And so term life insurance is what you see advertised in most places. It's a life insurance that you purchase for a number of years, and at the end of that time frame, the life insurance expires. And so think of it like a 10-year term or a 20-year term. Some of the characteristics of it is you buy it for a specific term. The premiums, you're just paying for life insurance. So it's generally a low-cost strategy for yourself to get coverage in place. It's really simple, and that's really it. Compare that to permanent life insurance. Permanent life insurance is indeed permanent if you continue to pay the premiums, meaning it will continue until you pass away. So the disadvantage of term is that you may pass away with that 20-year term life insurance in the 21st year and not have any life insurance, whereas permanent insurance, you would have it throughout your life. And there are different types of permanent life insurance. You have whole life, universal life, variable life, but they all have that attribute that they go until the rest of your life. And another factor about the permanent is that it's actually both life insurance and investment. Because of that, it's more expensive than term insurance. And so for many people who are looking for a low-cost strategy, term insurance is the best way to go. But if you're looking for something that will be permanent, that's where looking at permanent life insurance not only has the benefit of going the rest of your life, but also has an investment component to it as well.
Next question's coming out of Dallas, Josh. It's from Ramona. Ramona asks, well, how do I determine how much life insurance I need?
So, Ramona, life insurance is based on your specific needs. There's really a couple different scenarios that you can look at. There's what's called a needs-based. Needs-based is basically looking at what the need is for the life insurance. So, as an example, people who have a family may want to make sure that something happens to the breadwinner, that the kids are put through college, that the mortgage is paid off. So just some of the basic needs are covered, and so you can just calculate all those needs, and that's the amount of life insurance that you would need to purchase. There's also another way that's looked at. It's called human life value. Human life value looks at your earning potential over the course of your life, and so it factors in basically your lifetime income, and it basically grows that, and it brings it back to present-day value, and that's how you determine the death benefit amount of the life insurance. So those are two common ways of looking at what your life insurance needs are. But beyond that, it's part of your overall financial plan. And so typically when you do a financial plan, the life insurance is calculated, the needs-based is calculated, as well as the human life value is calculated for you.
Great question coming out of Alito from Dora. Dora was wondering, can I convert my term life insurance to permanent life insurance, sir?
You absolutely can, Dora. So one of the neat features about term life insurance is that for a lot of people who are getting started out but maybe have a young family, they may not be able to afford the permanent life insurance. They can buy term life insurance that's convertible to permanent at a later date. And so you just need to make sure that when you buy your policy that it has that conversion benefit to it, and most of them do. And then a lot of them actually that conversion period will end before the end of the term policy. So you need to make sure that you know when that ends. But indeed, that's the great benefit of term life being convertible, is that you don't have to go through underwriting again. So I can basically buy a 20-year policy, and then in that 20th year, I can convert it to a permanent life insurance, and I wouldn't need to go through the underwriting process to see if I'm eligible for life insurance. And so that's another great benefit of it, is that, again, is if you have adverse health issues later on in that term time frame, you can simply convert it and not have to worry about the underwriting process.
Remember, folks, we're talking with Josh Stripmatter of Stripmatter Wealth Management Group. If you want to reach out to the fine folks over there, you can find them online first at stripmatterwealth.com. That's stripmatterwealth.com. You can give them a call. 817-210-3444. That's 817-210-3444. We're talking in regards to life insurance today here on Ask the Experts. Moving right along, next question is coming out of Dallas as well. It's from Jim. Jim asks, I have heard some of my friends talk about laddering life insurance. What does this mean, Josh?
So, Jim, what laddering of life insurance means is essentially life insurance for a specific purpose. So as an example, you have a mortgage on your house and you want to make sure that that's paid off in the event of your death, then you would buy a life insurance policy that would basically go for the term of that mortgage. Then you might have children that you want to make sure that they're educated. So you might buy a policy that will pay for their tuition throughout their college years. And so you just make sure that that policy is enough to pay for their full tuition, and then it expires at the end of their college year time frame. And so this is using term policies. You can also stack on top of that a permanent policy, one to just make sure that you get your spouse taken care of. And so that's a lower cost way of doing it, because you can buy a cheap term policy for some of those near-term needs, and then a permanent policy that would last you for the rest of your life. So that, again, is you have some life insurance in place throughout your life.
We're coming up on a quick break here on Ask the Experts. Another question to get to before we take that break. It's coming out of the great city of Lake Worth from Joanne. Joanne asks, how much does life insurance usually cost? I think a lot of people are curious about that.
Joanne, so cost of life insurance is based on your health. And so the greater your risk of dying, the more likely your premium will be higher for your life insurance. And so that's why it's always recommended to get life insurance when you're younger, because that's when you're your healthiest. But what's interesting is the cost of life insurance is actually the same throughout your life, no matter when you buy it. And the reason for that is that the cost goes up every year as you get older, But when you buy a term policy, they take the average of that time frame. Say it's like a 20-year time frame. They'll take the average of that rising cost. So you pay the same premium throughout your life. Now, you also have annually renewable term where you can pay that increase. So it starts off really low, and then it gets higher as you get older. But for most term policies, it's a constant premium. Now, with permanent, it works a little bit differently. It is an increasing premium at certain ages in your life. And so as you get older, that cost increases. So the idea is that if I bought life insurance when I'm 20, my premium would be low, but it's low because I'm paying it to my life expectancy. So I'm paying it for more years in my life. Whereas if I bought it when I'm 50, I don't have that 30-year time frame that I paid those premiums. Therefore, my premium is going to be higher because it's a shortened time before my life expectancy. So, again, a shorter number of years means a higher premium that I've got to pay to make up for the cost that I didn't pay when I was younger. And so the other factor that affects that, though, is your health. And so if you have health conditions, then they will do what's called rating the policy, where they add more cost to it because you're a higher risk. And so, again, you get life insurance when you're healthy because you don't have that added risk. And for many people, they get what are called preferred rates, which are really inexpensive. And so when you're applying for life insurance, you go through that underwriting process where they take a physical medical exam to determine your health. They look at your health records. And that's to determine if they're going to increase your premium based on your health condition. Your cost of the insurance basically stays the same, though, based on your age. They just add on top of it for the health risk. So moral of the story, Joanne, is that life insurance, and by the way, I should also mention this, too, is that life insurance premiums can vary by carrier. So it's always good to quote out your life insurance with multiple carriers so that you can see which one provides the lowest premium for you. And, of course, you want to take into account the credit rating of the life insurance company, make sure it's a good, solid company, pays out their death benefits. And so you'd look at the credit rating, you'd look at the cost, make that decision for yourself. But indeed, and then I would say one last thing is that, there are life insurance companies that are considered a higher risk life insurance, meaning that if you can't get life insurance because of your health condition with one carrier, you may be able to get it with another carrier. And that's why it's important to do basically a pre-examination, which essentially is just filling out a questionnaire to pre-screen you to see if there's anything that may essentially cause that premium to go up anyway. So that's what we do. We pre-screen our clients to see if there's a health condition, and then we talk to our agency and we find out if there is a health insurance policy that might be a lower cost or one that will actually underwrite them if they have severe health conditions. So pre-screening is important, but bottom line, you want to compare premiums and, again, try to get life insurance when you're younger.
This is Ask the Experts here on Talk Radio 1190. We had to take a quick break. When we get back, we'll pick up where we left off in terms of life insurance with Josh Stripmatter here on the show today. Stay tuned. This is Ask the Experts. Quick break, folks.
And your so-called Social Security.
Welcome back to Ask the Experts, folks. I hope everybody's enjoying their morning. We're talking with Josh Stripmatter of Stripmatter Wealth Management Group today in regards to life insurance. Always great to have him on the show. If you want to reach out to the fine folks over there, remember, it's stripmatterwealth.com, stripmatterwealth.com. Phone number is 817-210-3444. It's 817-210-3444. A lot of great information we covered in the first half of things. Stay tuned for this because I tell you what, we got a lot more to get into, and we're going to jump right back into it now, Josh. Next question's coming out of Colleyville, I should say, from Milton. Milton asks, well, what are life insurance companies looking for in their health exams?
Yeah. So, Milton, when you do the medical exam, they're collecting your height, your weight, your blood pressure. They take a urine sample, a blood sample, and then they look at those as well as things like your age, your gender, your family health history, and just your answers to your health questions to determine what rate class that you fit in. And so when you're working with your agent, again, different insurance companies will have different underwriting processes, so you want to be sure. Again, pre-screening is a good idea. And beyond that, again, is what I always tell clients is that when you're applying for life insurance, make sure you are answering truthfully, and make sure you tell your doctor, that because they're going to request medical records in many cases, that give the doctor the heads up to, hey, please make sure that you get back with them in a timely basis, because the underwriting process can take a long period of time. Oftentimes it can take months. And so a lot of times that's held up by a request for a medical file from a doctor. So it takes you being proactive when you're going through the underwriting process to help that process through. And then a lot of times they'll come back if they do have questions. They'll ask for some substantiation on some stuff, or they'll go to a doctor and request additional information from the doctor. So again, it's overall, it's important to be upfront with your medical information, and again, is through the pre-screening process that helps us to find a carrier that will actually underwrite you. Whereas a lot of times, a lot of carriers, you would have been declined in many cases before you ever filled out the paperwork. So that's why pre-screening is so important.
Miriam from the great city of Fort Worth, where, of course, the Strip Matter Wealth Management offices are located, downtown Fort Worth to be exact. Miriam asks, is there such a thing as joint life insurance policy, Josh? And if so, what are these used for?
Miriam, there is. So a joint life insurance policy, also called a second to die life insurance policy, is where you have two people, typically a married couple, that will apply for a policy. And what's different is it pays out at the second death. So the first spouse dies, nothing happens, and then the second spouse dies, and then it pays out to the estate. So a joint life insurance policy is often used for estate planning because it can provide funds to the estate to pay taxes or to provide funds for paying off debt, things like that. So again, it's often used for estate planning purposes. One of the benefits of it is that it's often less expensive to buy a joint life insurance policy because it's insuring two lives. And so one premium covers the two lives rather than having two separate policies. Another reason why is that if you have some health conditions, that's a reason why you could get a joint policy as well to help you get the life insurance. But again, great tool to use in estate planning, and a tool we use quite often with estate planning.
Another one coming out of Fort Worth from Javier. Javier was wondering, Josh, can I designate whomever I want to be a beneficiary on my life insurance policy?
So the answer is no, Javier. So you have to have what's called an insurable interest. An insurable interest means that oftentimes it's a family member that would be your beneficiary. Although if you go too far down, there may not be an insurable interest. So in other words, there has to be a reason why they're buying life insurance on your life, or you're buying life insurance and adding them as a beneficiary. So it depends on the situation, but it does matter who the beneficiary is. And, I would talk to your agent about, your situation if you think that may be an issue, and find out if there might be an insurable interest that you might not be thinking about.
Remember, folks, we're talking with Josh Stripmatter of Stripmatter Wealth Management Group. 817-210-3444. That's 817-210-3444 is the number you can find them at. StripMatterWealth.com is the website. And, Josh, I know we talk about this some, but I'm going to make sure I highlight it in today's show. Of course, there's so many different ways that folks can get information or reach out to you guys, whether it's you got a ton of great articles that you guys write. Of course, the classes, great information in the classes if they want to sign up for that. And last but not least, if they do have any questions or whatnot, it's easy to set up a meeting with you guys. Just pick up the phone and reach out.
That's right, Matt. Yeah, I mean, we are a wealth of information, and we try to be an educating firm. So, as you know, we teach a lot of classes and have for years. And so we try to help people wherever we can to get good information to make decisions. And I think that because of our focus on that, we've tried to, over the years, really be a resource for many people. Certainly a resource for lots of professionals out there. But we are happy to help, and we're happy to provide value wherever we can. So be sure and give us a call, shoot us an email if you do have something that you're working on that you need help with. We're happy to help.
Yeah, and I just wanted to point that out. Of course, we cover so much stuff on this show weekly. I know they get a ton of information from that, but if there's any questions, don't hesitate. Reach out to them, set up a meeting. They'd be more than happy to help you out with that.
You bet.
Let's go, and we got a couple more questions before we finish things up, Josh. This one's coming from Fort Worth from Salvatore. Salvatore asks, when an agent tells me that my life insurance will be fully paid up by a certain age or year, what exactly does that mean?
Sure. So, Salvatore, what that means is that you've purchased typically a whole life insurance policy, which is a permanent life insurance policy. And a lot of the ones that we see are paid up at age 65. So you pay a premium until age 65, and then you no longer have to pay a premium any longer, and that life insurance would go for the rest of your life. And so I think that's a great idea. I think it's a neat tool because for a lot of people, when they turn 65, they don't have a lot of extra cash. So it's a time frame where their cash flow has dropped because they've retired. For people who have permanent policies, though, they've got to keep paying that policy if it's not a paid-up policy. I like the idea of a paid-up policy, and I think it's a great tool, particularly to help you out in retirement when you don't have as much cash flow. So, yeah, it's just a whole life policy that's permanent and paid up at the end of the time frame, and then you're done with it.
All right, Josh, last question of the show. Annie from Arlington asks, well, how can Strip Matter Wealth help me with life insurance?
Annie, we can help you in lots of ways. So part of our analysis is to look at your life insurance needs. So we look at two different types of calculations, as I mentioned earlier, needs-based calculation and a human life value calculation to determine those two different values, and then to help you kind of make a decision on that. And then based off of that, we talk about a good strategy for how to address that, whether that's to just use low-cost term life insurance or a permanent policy. For many people, we use just low-cost term. I'm a big believer in low-cost term, but there are examples of where we'll use the permanent life insurance as well. And again, usually it's around estate planning or where people have expressed that they have a permanent need and they want to have life insurance for the rest of their life. So, I think what we could offer you is the ability to have the analysis done to determine your need and then a conversation around the best way to address that. And I'll also tell you, too, is that in many cases, we talk about insurance overall and determining what are the best insurances that you should have during your lifetime and kind of prioritize that to make sure that you do have the right types of insurance in place. And I'll share with you, in many cases, life insurance is not at the top of that list just simply because many people, they can get on with life, when somebody passes away. So we talk about some more pressing types of insurance, like disability insurance as an example, where life becomes harder when somebody becomes disabled. So we try to walk you through different ideas and different scenarios and help you make an educated decision. And, that's what we could do for you.
Well, Josh, unfortunately, that's all the time we have for questions today. But before we close out the show, do you have any closing remarks for our listeners out there?
Absolutely, Matt. I want to thank our listeners for their great questions and for tuning in today. Also want to invite them to sign up for our financial education classes, or they're welcome to just schedule a complimentary consultation. What that looks like is a 1 to 2 hour meeting in our office where we talk about your goals and your objectives and help you to begin to formulate a plan to achieve them. Also want to encourage our listeners to download our free report titled The Top 10 Retirement Mistakes to Avoid This Year. And Matt, again, that's just a great resource that I've written that has some great information to help prepare you for retirement.
All right. And again, folks, one more time, to request this resource, it's simple. All you got to do is go to stripmatterwealth.com. You click on resources and free report. Just go to stripmatterwealth.com. Click on resources and free report, okay? Also, you can email them at info@stripmatterwealth.com. That's info@stripmatterwealth.com. Give them a call, 817-210-3444. That's 817-210-3444. And last but not least, my texters out there, we got you covered. 1190 a.m. to phone number 44222. Just text 1190 a.m. to phone number 44222. Another show in the books, Josh. A ton of information, as always. It's great to have you back on the show.
Thank you, Matt.
Of course, and we'll do it again here very soon. You've been listening to Josh Strittmatter, owner of Strittmatter Wealth Management Group, located in downtown Fort Worth, Texas. Josh is a certified financial planner and fiduciary. His firm specializes in retirement planning, estate planning, and investment management. If you'd like to ask him questions directly, email him at info@strittmatterwealth.com or give him a call, 817-210-3444. That's 817-210-3444. All right, well, we got to get out of here. We got to wrap things up on Ask the Experts. Great to have him back on the show. We'll talk to him again here very soon. Until then, folks, stay tuned for more. This has been another edition of Ask the Experts here on Talk Radio 1190.
And your so-called Social Security.